Welcome to OpenECRY's Trader Training. My name is Toby Gennaro. What I'll be talking about today is a trading strategy that we're teaching in the OpenECRY Advanced Strategy course. We call it the Trend Flow Strategy, and it can really help you trade more consistently over a larger sample set of trades. Let's go ahead and take a look. Here are a couple different trading styles that you might be curious about. Counter trend trading means that you're trading against an established trend. Now, you can get some great reward to risk scenarios if you happen to be right on this trade, but it is an overall lower probability trade setup. Now, trend trading is what we're doing with the two trade strategies, the trend flow strategy and the momentum breakout strategy. We are looking for strong trends and trading with the market consensus. And this is by far a higher probability trade when you're going with the market momentum. Now, the typical mistakes that people make with these two strategies that we're studying is that they don't identify a strong trend first. The momentum breakout strategy and the trend flow strategies are trending trade setups, and that's why we spent so much time talking about identifying solid trends. Okay, the precision trend flow strategy. As with the momentum trade, we are still looking for strong trends for the trend flow trade, and we're still looking for confirmation on multiple time frames. The same trending chart structures need to be present with moving averages in correct geometrical patterns, similar angles, fanning out, pointing all in the same direction. We want to see this chart structure across a minimum of 2 time frames. The entry is very different than the momentum trade setup. Okay, in an uptrend, the trend flow entry is defined by a bullish candle in the buy zone after a pullback, and we're going to be buying on the next candle as price breaks up through the high of that setup candle. Now, in a downtrend, the entry is defined by a bearish candle in the sell zone after a rally, and we would then sell on the next candle as price breaks down through the low of that setup candle. So make sure you understand the candle entry. You have to wait for the close of the setup bullish or bearish candle in order to have the entry completely defined. So you're actually placing your order as the next candle is actually forming. Then we place our stop behind the higher low in an uptrend or above the lower high in a downtrend to protect it. And we risk a maximum of 1% on each trade, regardless of how strong the trend is or how good the trade looks. In terms of entry and stop loss, this is what it looks like on the chart. In this uptrend, we have a small bullish candle setting up, and our entry will be 1 tick above the high of this candle with our stop 1 tick below the low. So once this candle has closed, we can then get our trade parameters set up as the next candle is forming. Now, these trade setups look easy, and they are easy to understand conceptually, but it's all about how you implement it in real market conditions. You just have to get good at it. So if you're interested in improving your trading and learning a trade strategy, check out the OpenECRY website under Education and look for other trading videos and webinars, or you can call customer service for more information and educational events. Thanks for watching OpenECRY's Trading Education.